How to invest in Bitcoin, a guide to getting started. Over the last several years, Bitcoin has become increasingly popular amongst today's investors. Since Bitcoin hits the financial market, there's been a lot of debate about it and other cryptocurrencies. Its proponents argue that it's the future of currency and investing, while its detractors argue that it's a risky investment option that may not generate big returns. Getting started with Bitcoin investing doesn't have to be complicated. So what exactly is Bitcoin? What is it used for? And how can you determine whether it's the right investment for you? In this episode, we'll walk you through how to invest in Bitcoin so that you can get started. But before that, don't forget to hit that subscribe button so you don't miss the future episodes about cryptocurrencies and investing in general. What you need to invest in Bitcoin. You don't need much to invest in Bitcoin. You only need the following: a digital wallet. The first step towards investing in Bitcoin is to get a Bitcoin wallet. A Bitcoin wallet is a digital wallet that virtually stores the Bitcoin and keeps track of all the transactions. There are many different types of Bitcoin wallet, and the user can choose any one according to their needs. The two main types of Bitcoin wallets are hardware and software wallets. Software wallets are similar to mobile applications that get connected to the bank account of the user. Coinbase is one of the best-known software wallets. Hardware wallets are similar to traditional wallets but are known to be safer and secure as they're offline. The best types of hardware wallets are Ledger and Trezor. A Bitcoin exchange. Bitcoin Exchange is an online place to trade Bitcoins to exchange traditional currencies, like exchanging Bitcoins for dollars. No two Bitcoin exchanges are the same, and they offer different services as well. Different Bitcoin exchanges vary in reliability, processing fees, cryptocurrencies available, exchange rate, reputation, and security for trading. The user must do proper research before choosing a Bitcoin exchange to invest in Bitcoin. If you decide to purchase from an exchange, you'll have to decide which exchange you want to buy from. Here are a few of the most popular options. Coinbase, a very popular crypto exchange that ensures losses in the event of a security breach or fraudulent transfers. Bitfinex, the longest running cryptocurrency exchange that's optimized for advanced traders and lenders. Ways to invest in Bitcoin. There are different ways to invest in Bitcoin, both directly and indirectly. Let's take a look at each of these ways. 1. Purchasing standalone Bitcoin. The most obvious Bitcoin investment strategy is purchasing standalone Bitcoin. Buying Bitcoin directly from an app like Coinbase allows investors to take physical ownership of the asset. That's an important distinction to make, as Coinbase allows investors to actually buy Bitcoin and store it in their own encrypted wallet. In doing so, investors will simultaneously gain access to the asset's price performance and use it as a currency to make subsequent transactions. Owning standalone Bitcoin isn't all that different from owning any other currency, less the incredibly volatile swings in value. It's important to note that not every online platform or application allows investors to own standalone Bitcoin. Online trading platforms like Robinhood, for example, allow people to invest in Bitcoin, but they do not go as far as to let investors own Bitcoin or its respective keys. Whereas Coinbase grants investors the keys to their own Bitcoin holdings so that they may transfer the assets to their own wallet, Robinhood does not. As a result, investing in Bitcoin on Coinbase will allow investors to own the asset and treat it like a currency. On the other hand, Robinhood investors can only take advantage of the price movement in their account and can't transfer holdings to an encrypted wallet. Investors who intend to purchase standalone Bitcoin need to know their trading platform's limitations before committing capital to any cryptocurrency. 2. Grayscale's Bitcoin Investment Trust, GBTC. Founded in 2013, Grayscale's Bitcoin Investment Trust has become a leader in the cryptocurrency industry. In becoming a trusted name in a rapidly growing sector, Grayscale emphasized democratizing Bitcoin for the masses. While Bitcoin is already decentralized, Grayscale gives more people more access to the up-and-coming digital currency. More specifically, Grayscale is an investment platform on the capital market that builds transparent, familiar investment vehicles for a growing asset class with unlimited upside. Grayscale owes its current success to making Bitcoin more accessible to everyone. In fact, Grayscale helped bridge the gap between the informed and the uninformed. To do so, Grayscale made it easier than ever to invest in Bitcoin. For example, Grayscale allows investors to hold Bitcoin in certain IRA, Roth IRA, and other brokerage and investor accounts. 3. Amplified Transformational Data Sharing ETF, Block. As its name suggests, the Amplified Transformational Data Sharing ETF is an exchange-traded fund traded on the stock market. Investors may purchase shares of Block on the secondary market and increase their exposure to Bitcoin. More specifically, however, Block is an actively managed ETF that specializes in blockchain technology. That means fund managers constantly seek out businesses that focus on blockchain technology and investing in them. Therefore, anyone investing in Block is invested in a basket of blockchain technology companies. While Block may not give investors access to standalone Bitcoin, it does give them access to the companies which use blockchain and its transformational data sharing technologies. What is Bitcoin used for? Once you purchase coins, you can use them in online transactions wherever they're accepted. Remember, when you make a transaction with a coin, there's no actual money being pulled from your bank account. Money only leaves your bank account when you purchase the coin itself, not when you make purchases with a coin. Like cash currency, the value of a coin may fluctuate. That's why some investors are getting excited about Bitcoin and other types of cryptocurrency. Investors speculate that Bitcoin's value may rise significantly if there's a surge in the market. For now, investors should pay special considerations to the rate by which Bitcoin and other relevant cryptocurrencies are being adopted. Not unlike traditional equities, Bitcoin increases in value when more people are interested, and more people are interested in buying Bitcoin today than ever before. Whether it's pure conviction or an inherent fear of missing out on what many predict to be the greatest transfer of wealth in history, trading volume continues to increase exponentially. For the better part of the financial market, in fact, Bitcoin trading volume has steadily increased. As a result, Bitcoin is regularly testing new highs. Is Bitcoin a good investment? Well, the real answer is no investment is inherently good or bad. It depends entirely on your risk tolerance, your investment strategy, and your financial goals. Before you consider Bitcoin as an investment, you should carefully consider your own goals and determine what you want to accomplish in your investment activities. Do you want to develop a passive income? Become a full-time investor? Save for retirement? Answering these questions will help you figure out whether Bitcoin is the right investment option for you. Bitcoin is a very high-risk investment because it's a volatile asset. That means that Bitcoin values may rise or fall dramatically in value over a very short period, even as quickly as a few hours or days. Like all cryptocurrencies, Bitcoin has no intrinsic value. It's not backed by any physical asset like gold or silver, and there's no central regulator to ensure that the value remains stable. Furthermore, Bitcoin value isn't linked to the profits of any one corporation. The value of Bitcoin is dependent on market demand. When there are more people buying Bitcoin, the value will increase. When there are fewer people buying Bitcoin, the value will decrease. To make a significant profit on Bitcoin, you may need to rely on timing the market, which is a difficult and generally ill-advised investment strategy. Nonetheless, there's a potential for profit. That's it for this episode. If you have any questions about this video, comment below with hashtag 11minuteclass and we'll try to make a video about it. To watch more episodes on financial topics like this, hit that like and subscribe button. If you want to support us even more, buy us a coffee from the link in the description. Good luck and see you in the next episode.